foreign investors, for example, I'll give you an example. I have a foreign investor who had set up an account in the US and was investing. So when he said, I want to invest with you, we send them the PPM, and all the paperwork came from an entity they already had in the US. So although they are foreign investors, the money was in the US, so we're paying that entity in the US. If they're foreign, let's say they're in France and they want to invest with you, if they invest directly from France and you're going to pay them a check in France out of the US, the IRS says you have to withhold at the source 30%. Best way to avoid that is to actually have them set up an LLC. They can do that literally online. They apply for a tax ID online. We can actually probably get you an attorney that can do that for you. If you're set up with us, we can help you set up this. So they loan from France or from wherever they are to their own entity with the virtual bank account, and then fill out the paperwork on behalf of the entity with this tax ID and give you the money. Then you're able to pay a US entity, and then they can actually borrow from themselves, from their US entity. They can file the taxes for it and then take the rest, etc. They can return the money as principal return, so there is no tax withholding. And then at the end, all the profit, they can just pay taxes on it, fly in, get a deduction for flying and looking at properties, whatever. So ideal scenario is an entity in the US, and that's the one that invests in your fund. This way you have the least amount of hassles and they get the maximum return.